step by step on how to trade our strategy the best and the most effective way. Now, guys, here you have already a few points. I'm going to go over all these points. I'm going to explain you how I map out everything specifically. And you will see that we will have so many different scenarios, so many different things that we need to look at them. And this is what I'm trying right now to put here together. I'm trying to explain you really from scratch why I map out things like that. And the most important thing is why I interpret them that way. Many people always forget one important thing in trading, and that is that interpretation is more important than how you're planning things, okay? Because you always try to plan something, right? I would like to go over timing, OB, liquidity, and so on. And this is how I map it out in a very structural way. Boom. And then you have an expected result. You want to take a 1 to 20 risk reward, for instance. That's what you expect. But this is not the most important thing in your trading. The plan itself, it's cool to have one, right? But how often in life did it happen that your plan didn't went out like you wished for, but the result was still good? And this is exactly what we are aiming for. We do not aim that our general plan should be perfect, right? That it will be the best plan in this world. Of course not. But what we try to do is we understand these concepts that we have, and we also understand that if we have a plan, we do not always need to stick to that specific plan. No, we go and interpret it. We are going to interpret always the new situation, and then we do everything in order to get our best possible result. Never forget this thing, guys, because this is what probably the majority of the traders is the reason why they fail, because they are so focused on getting everything exactly like in the plan, but then they forget to use their mind to make a proper interpretation on new circumstances. Because sometimes, you take a trade, the trade is running, but then price is delivering you a form of price action which is invalidating totally your previous plan. And this is the point where you need to understand, hey, I need to close my trade. I need to put it to break even, because that is trade management, okay? Or I need to take a different trade right now. I can hedge my trade and so on. And it's super important. And this is why I'm going to go right now over the step-by-step guidance to show you exactly on how we're going to process everything here when it comes to our strategy, okay? So number one is timing. Timing is something which I already decide the day before I trade. Very important, because I want to know what session I'm going to trade. And if I, for instance, want to trade Frankfurt, then I need to set up my alert that I'm awake at that hour. Very often, I sleep during the Frankfurt session because I'm very focused to only trade the London session. So I do not really care about what Frankfurt session is doing at that moment, but I do care afterwards. And this is also included in this point, that you need to evaluate always the informations that are relevant to you. So for instance, right now, if I want to trade the London session, then I of course need to know what Frankfurt session did, but also what Asia did. But to be honest, I do not really care about what New York did the day before. I only care about what New York did before in terms of the higher time frame analysis. But for that, I do not need to know what specific session led to that one reaction, to this one move up, move down, okay? So, very quick example, just to illustrate it to you in a nice way. We have, for instance, here the Asia session, right? So price is moving to the upside, blah, blah, blah. Coming down, making here some proper mitigation and so on. And now, Frankfurt is making here this BOS. So what I need to know right now here is pretty interesting and important, is to understand both informations. I need to understand where is the Asia. For instance, I understand right now because of the overall situation that I have here a demand area, price mitigated that, it did took out some form of liquidity, and I understand also that Frankfurt just leaded to an BOS over there, and I have a demand here, and I have some form of liquidity being provided already here. So what my plan is right now for the Frankfurt session is to evaluate these informations and to understand that price needs to go here and then to go long. That's why I need to understand timing. That's why I need to understand right now what kind of context we have. And I do not care right now about what New York did here, okay? But I do care about what it did on the higher time frame analysis. And I say, oh yeah, it created this big push on the higher time frame. BOS here, we're in a bullish context. We should expect price to continue to go bullish and so on. Okay, so this is relevant for me. This is the first point that I'm always looking for is timing, okay, to understand what session I'm going to trade and to also to understand how to evaluate all these points, okay, to understand the newest information. So this is what I do is always when I wake up is map out Asia, map out Frankfurt session, and then I understand, make my interpretation of what the London session is about to do. Differently, it's now when it is the New York session. When it's the New York session, I need to understand what the London session did and what Frankfurt did and what the Asia session did in order to understand how to take the best information out of my New York session, okay? Then the next point for me is OB. Understanding right now where the relevant OBs are. So I'm just going to start everything from a multiple time frame analysis. I'm going to always start with the higher time frames. So I'm just going to share right now all the time frames that I'm looking for. It's always the monthly, the weekly, the daily, the H4, the H1, the M15, the M5, and the M1, and the seconds only for entry confirmations. When it comes right now for me to map out my OBs and so on, I always like to look only on these time frames. You can also see right now here in the left corners that I have here more time frames on it. Why do I have that? Well, not really because I'm using that, but sometimes the M1 isn't clean, which means there isn't a form of OB that I want to use. So I go to the M2 to see if there is something which is more clear to me. Or I go to M3, M4, 10 minutes, 20 minutes, 30 minutes, 45 minutes. But also, these are not always relevant. These are just like averages between the other time frames, okay? But you can see right now, everything above, I do not really consider. I mean, even the H1, I do not consider that often. For me, really, the prime time frame is M15, M5, M1. That's what I need. Of course, I like to use 4 hours to understand the overall high time frame approach. The daily is not always important, weekly also not always important, and monthly also not always important, okay? Because monthly, weekly do not change that often. The daily is changing every day, so a quick check on it is definitely worth it doing it, but you get the point, right? So just saying to you that more likely here for my London trade, M15 is more relevant, M5 and M1 to understand right now which OBs got mitigated. And this is what we need to understand right now. Where are my OBs? This is why I start personally with OBs. I do not look on any other things first. I check out the OBs to see, okay, where are the mitigations? Where are the imbalances? Where price could go? Where is a potential target? And then I'm combining that one concept already a little bit with liquidity to understand, okay, do we have some form of equal highs? Do we have some form of high that we want to see price taken out or low that we want to see price taken out, okay? Or understanding multiple lows, multiple highs, and so on, okay? Internal liquidity and so on, if there is something that makes sense for us or not. Looking something on a higher time frame to see, okay, maybe because the weekly looks like that, we will more than likely go there, okay? But what I also understand already just from the OB perspective is from a higher time frame where price needs to go, right? Because you see where your supply is, your demand zones are, you see where the reactions just get into it, you see where the trend is, so price needs to go for that. And only then I start looking on structure, and then I try to understand where structure specifically is, okay, to put it into the context to see if it makes sense or not, where we may see a little bit of traps or no traps, Is it in alignment right now with the overall trend? This is super relevant then, and you will see you need to also look then structure from a higher time frame and to a lower time frame. Very simple is right now that if you have, for instance, the weekly, which is just going down like this, right? So it's breaking structure, and you see prices right now back to it, right? What we want to see is an OB being here, okay? Now, of course, you got your internal break of structure. It is here from the substructure perspective, it is bullish, 100%. But you need to understand that right now, you are on the go to tap into the area of supply where you have ideally here some form of liquidity, right? You are currently right now bullish, 100% yes, but the overall situation is bearish. So you need to understand that more than likely price will go down lower, and that means that even if structure right now shows you that it is bullish, you should not be bullish at that time. You need to follow then the bearish trend, and you need to understand how structure is going to get manipulated to understand right now if it is liquidity at that point or if it is real true structure. That is the point. And if everything is then into the right place, everything is understandable, we understand then where the entry confirmation should take place, okay? So more than likely, we already see it, like I explained it to you, from the informations that we collected so far, where price needs to go, okay? So you have your higher time frame targets, okay, or mid time frame targets where price needs to go, and then you try to just go for that one direction, and that's how you can then validate your entry confirmation, because you know, okay, price, for instance, if we have a context like this, price is here going crazy like this, and we know right now, okay, somewhere here there is a supply area, okay, here we got a supply area, and you have here a demand area right here, okay? So you know from the standpoint, price needs to go to the supply and to the demand, or we have the chances. So what you could do is to trade right now like along here and to the supply and then go short, because you understand price will need to go down. So there's also perspective on how we would like to take our trades, because we understand already price will go from this demand to the supply, and that supply is then a higher time frame supply, which will bring price all the way back down to a demand over here, which is on the higher time frame again of demand, but also on the lower time frame something. So this is also how we need to take everything into consideration, and not always like, okay, here is the demand, there's where I want to see price, and only if price would come here I take the trade. 100% possible to do that, but hey, you will lose so much potential movements, and that's not what we want to look for, right? We would like to take some serious and nice trades in everything which is possible. And here also trade management comes into place, because you need to understand then how to manage your trade. Like, you understand this is a potential short, even if price could go like this, why not closing at these points? More than likely, such a movement will give you at least 20 pips, and 20 pips is something that I try to collect on a daily basis. So this is how I set up my trade management at the end, to collect something around 20 pips on my trades, and then I'm just already ready to close it, right? Personally, I do not really put stop loss to break even on all these things. I do this very rarely, only when I really see that it makes sense or not. But more than likely, what I'm trying to do is always to set up my trade management for a 1 pip stop loss with a 20 pip risk reward, so I can go for a 1 to 20, and this is actually my daily bread and butter. I know that 1 pip stop loss may sound a little bit ridiculous to the majority of you, and yes, it is probably at the beginning, but with time you will start learning that, and you will start implementing that, and understand that one pip is not that crazy, okay? So also I like to go a little bit more than 1 pip personally on my trades, so I go max for 2 pip. That's what I do, but 3 pips is for me personally right now already as too big stop loss, which I don't want to take into consideration. So that's not on how I'm going to trade personally, guys. You can do that, of course, because if you understand everything, you will probably need to more swing trade all these things if you want to get pretty crazy risk reward on your trades. So this is why I would try to minimize your stop loss, but I would not really try to maximize too crazy the take profit range, as it could be sometimes tricky, you know. If you want to be more a swing trader, then you know you need to overall change a little bit the approach, okay? Then that's totally fine. You will need to make analysis on the higher time frame very precise to really understand where price needs to go. But you can be there very often victim to the market. So I'm just going to say that up front. This is why I am personally an intraday trader, because I understand where price needs to go in a specific session. So I just want to capitalize on the session's movements. So this is how I plan overall my trade management, and I don't want to hold right now like my trades for several days or several sessions, several weeks. I don't know. For me, one session, that's fine. Okay, so even if I do take, for instance, here you can see pretty nice. This is the Frankfurt move. This is the London move, but then resulting into this, and then New York is taking over place. So you see already right now the way and how these markets right now here are going to be displayed. You already know that it's stupid that you're holding you along forever, right? Because it would not work out. You would get just trapped at some point, because that was your Frankfurt trade. Why the hell should you hold it if you could just enter it one more time here? So you would have two beautiful trades at that time. Going for a short, close it, because you have another opportunity right here, and then here the third one. So that's how it really works. So I try to really capitalize on one specific movement because I understand the overall situation. So here, like I said, everybody needs to find a little bit their own way on how they're going to put these things together. And I will go down here now in the next video over some examples.